Good afternoon, ladies and gentlemen. It is Thursday, 21st of October, 2021. Welcome to Hindsight, episode 22, where we learn to be a better trader. I'm going to take a look at the trades that I've taken for today in hindsight. I'm going to take a look at what went really well to see if we can replicate that success in the future. And then take a look at what went poorly to make sure that I don't repeat those things in the future. So do keep in mind, I'm not a financial advisor and this is not financial advice. Consider this as education and entertainment purposes only. So first things first, we've got ELO, the news announcement for today, 61% growth with a strong Q1 ARR. Now ARR is annualized recurring revenue. You're going to see that quite often. This is actually a phrase that's coming out, or a terminology that's been used quite a bit lately. It's more of a 2021 thing that's popping out. So didn't really used to see ARR previously. It used to be EBITDA or NPAT or literally any other terminology, but this is new, this is different, and it sounds really healthy. So you can see these numbers here, you can read them on your own time. Sounded really good. It traded very thinly, so I wasn't a big fan of the order book on this one. Took some on match, and it really, I didn't take too big a size because I didn't like the fact that this was, that sort of $5 range. I don't typically match these kinds of stocks in the $5 range anymore. I wait for the range break, but because this was such a small market cap company, I thought, you know what, I'll take a small bit. Didn't end up getting any kind of range break because, well, it just sort of popped a little bit and it was kind of flagging, but I just didn't like the price action. So I took a little bit here, was happy with it. Moved on to CIM Group, and this is stock ticker CIM. Now this one had a good sounding announcement. I wasn't quite sure of the strength of it, but to me it read all right. Now, in terms of growth, 9.2% year on year, it sounds actually quite healthy. All these financial metrics on the dot point, and I really didn't go beyond the dot point here, they all sounded quite healthy. So trading this one was a bit unfortunate. So, I was actually looking for the breaker range here. So this is where it opened up, and it was a classic break of range trade. So this horizontal here, it was forming a base, popped out, and of course you can tell that these always end up popping out on rising volumes. So good confirmation, but I did end up not watching this one after a few minutes because I had another stock on my plate that was moving much harder. So this was kind of on the back burner here. I took a few ticks at most. I did not catch this big breakout, but that's okay because I had so many stocks on my watch list today and so many things were moving that I was happy to miss this one. So really good announcement, and we can look on the daily chart as well, and we can see the stock's been basically getting hammered for the last year. It's been on a bit of a downtrend. So to see that kind of financial health in that report sounded really good. I had good expectations of it, but the gap up just wasn't there, right? I was a little skeptical about the move. I'm like, I was questioning myself ultimately. I was like, am I really reading this correctly? Is it as good as I'm seeing it? But ended up being quite good. On a typical day where not much is happening, I absolutely would have watched this for the breaker range, but I'll show you a bit later the trade that really stonked for the day. Then we have EPX, again, another ARR-based announcement. This is a micro cap. I think this was somewhere around the 10 to 20 mil market cap range. So the financials were interesting to say the least. However, financial reports don't usually move micro cap stocks that much. So looking at EPX, took some on match, and I was really happy with the move, but you can see just the volumes here all day long was garbage. So traded in small size and scaled out in small chunks as it was moving. I was looking for 24 initially. I had to pull that order very quickly and then just start scaling it out. So it is what it is. I was still happy with the trade, still got a few $100 out of it. It's something. But ultimately, the liquidity just wasn't there. It was a micro cap, very low shares on issue. Not much interest in it. However, this one took the cake, and that was CXM. And I love this, by the way, on the left-hand side. It tells me everything I need to know about the company, basically. How much cash on hand? That is so fucking helpful. Market cap, brilliant, 15 mil. Current share price, 4.3. The shares, 367. What it doesn't say, which would be nice, is the top 20 holders, who own about, I think it was 73 to 75%. So 367 mil is a nice number to have. It provides good liquidity. So 100 mil and less, tends to be a bit gappy, and 500 mil plus tends to be a bit too thick on the bid. Or sorry, not on the bid, on the ask. So it's a lot harder to push a stock. with 500 mil. You got to really make every tick count. But with 367, that's like the sweet spot. Anywhere from 200 to 350 is like the sweet spot for shares on issue, I find. That's my comfort zone. I love it when stocks come out with Catalyst and have this many shares on issue. And do keep in mind, so I did say 70 to 75% hold in the top 20 of shares. So, take 3/4 off this and you're looking at somewhere around less than 100 mil free float. But it's still traded very nicely, even though the free shares on issue, or the free float, whatever you want to call it, is so low. So took it on match. And just to talk about this announcement as well, Samsung C&T Corporation, I don't even know what the hell that is, right? Samsung C&T. I'm going to assume that's Samsung, the same Samsung that makes phones, is somehow working with this company in the agriculture kind of space. It doesn't make sense to me, right? All I see is Samsung. I see that there's some sort of deal. It's finalized. It sounds okay. Okay, this announcement looks okay to me. What got my interest was mostly to do with the fact that it has Samsung in it. So any micro cap company, especially in that sort of 5 million to 20 mil market cap range, when they partner or do deals or do term sheets, do these kind of things with larger well-known companies like Microsoft and Dell and stuff like that, the company is just going to get attention, and that's what we see. So got some of the match, and the match was really interesting because in the last 15 seconds or so, it just jumped. It really moved. We saw somewhere from 6.4 to 7 in a matter of a few seconds. So I had to get that amend ticket up and get it ready and make sure for me that I got in on this stock on match. And then added on the pullback. So this was really strong. So when I say match trading's garbage, that is very much for mid-cap stocks or upper small cap. I'm finding this extremely comfortable with micros that have a Catalyst news announcement. Just catch it, control the risk, and you can see just the volume and strength to the upside. Even this little red candle here on high volumes held up very well. Felt very comfortable catching the pullback to 8.5-ish. I can't remember exactly what number that was, 8.6, 8.5, but I did catch the dip because once it sort of pumped from this level here from 70 to 90, it's just very comfortable. Sorry, 7 to 9 rather. It's just a very comfortable trade to get to 10 cents. It's a 10-cent magnet at that point in time. When it gets there with little resistance, because I'm assuming the low shares on issue, I'm always targeting 9.9. Now, I've had this discussion in my private Discord. We're discussing whether to take 9.9, 10 cents, or 10.5 cents as the first target. Now, for me, I'm stuck in pre-COVID mindset, right? I've been trading these speckies every single time I go for 9.9. For me, that feels like a 95% likelihood of getting there, right? Once it hits, gets to 8.5 comfortably, and there's no resistance to 9, it's basically guaranteed to get to 9.9. Obviously not a guarantee, but it feels like a guarantee. Very, very high probability. Now, it gets there, but lately there's been a trend where even 10 and 10.5 get taken. So I should probably update the way I trade this, because that is technically 6 ticks. Because once it hits 10 cents, it goes in 5 tick increments, or half a cent per tick instead of 0.1 cent per tick. So it seems that every time we hit this 10 cent level, 10.5 gets taken. I'm starting to notice that as a trend. Now, 9.9 seems to not be the way to go anymore. It's still a habit, but I think this CXM trade has confirmed it for me that 10.5 should be the target, because 10.5 did get wiped here. And I think I'm going to start implementing that. Maybe I'll start doing half at 9.9 and then the other half at 10.5. I think that's probably the safer way for me to do this in the future, until I really, get a feel for the market and confirm that 10.5 is in fact the way to trade this now. So I don't know if you guys know, if you've watched enough of my content, I fucking love 9.2 pullbacks. 9.2 is the number to go. That is, if this rally to 10 cents, particularly from sort of the 6 to 7 cent range, when it just rallies to 10, there's going to be a pullback. It always sort of hits 10, 10.5 and then pulls back. The bids always look terrible, right? This is a huge, huge, huge psychological barrier to trading 9.2. Even the people I was trading with, they know my 9.2. I talk about 9.2 relentlessly every time it hits 10 cents. It is just a target. It is always a target for me. They know it. And, you know, some of them just don't feel comfortable because of the book, right? The book always looks terrible. The bids get pulled. The bids look really weak. There's always a stack at like 8.9 or 9 cents, but it never seems to get there. So 9.2 is always 100% for me, is always, always, always the buy target. The exit roughly is somewhere around 8.9 to 9 cents, depending on the bid, depending on the volumes, right? So if 9 cents starts getting sold into on high volumes, I'm getting the fuck out of there, right? And if it gets reloaded at 9 cents, then yeah, I'll probably have to end up paying up at 9.2 again. So, you know, take a couple of ticks loss and then just buy back in at 9.2 if the volumes hold. So that's how I play this 10 cents pullback to 9.2. It's just a magical number. I can't tell you why it works. It's just, it always works for me. Always, you know what I mean. It's a generalization. So if you found that useful, that information useful at all, please do consider hitting that sub button. And do pay attention to that in the future, right? I'm not telling you to do it every single time, but I am telling you that you should look at it. Every time you see a rally to 10 cents, just pay attention to what happens on the pullback. Now, of course, this only applies to a stock that has strength. Now, what I mean by that, and that sounds really coin flippy there, is like, well, it could go up, it could go down. My point is, you get a feel for the stock. I got a feel for this that it was really strong, right? This just straight up to 10.5. The volumes, the liquidity, look at the volumes here on the sell down compared to the move up. And we're still in the first half hour of the day, right? Low volume trickle sell, buy in at 9.2, volumes kick back in. And of course, I sell a little bit at 9. Actually, no, sorry. I think I sold everything. Yeah, I did. Sorry. I did sell everything at 9.9 again. So, you know, that was probably not the best. But if a stock rallies 9.9, if it fails, that's where it's going to hit before failing. I probably should have taken half. Admittedly, that was not the best trade that I could have taken. I think I might have taken some at 10.5 as well. I can't remember exactly. But I know for certain that I took a large chunk out at 9.9. Watched the rally and saw it come back and saw this really tight consolidation on volumes. Now, of course, that's like a pump consolidate. Remember in my previous video the other day, LDR, I think it was. Exact same situation, but what we're doing here is trading in the 12 cent range. Now, every tick matters here. 12 to 12.5 to 13, right? These are half-cent increments, which is why it looks a bit like this. It's not comfortable. I don't like it. But, you know, seeing it go sideways for long enough, I thought, right, this is exactly, you know, this is the exact same scenario as LDR, except at the 10 cent range. So took the risk, bought it in at 12 and 12.5. 12 was on the ask, so thankfully I managed to get some on the ask there at 12.5 and 12, and then just sold it out as it went up. Sold into strength. I didn't know how much was in it. So it scaled out. I ended up getting, I can't remember if it was 14 or 14.5. I remember 14.5 was my target, but I don't actually remember if I got it out there. Point is, scaled out into strength, and that was the trade there. And of course, this level here as well. And what I'm looking for really is this base here. And it could have been at that level or this level. I can't remember which one I was watching, but ended up getting back at 13. The idea is, again, it's just a rally, pullback, rally, and where's the highs now? This is the base from the highs. So that's the idea behind that trade. It's very straightforward technical stuff. I didn't like the book on CXM. It felt spoofy mixed in with a bunch of legitimate orders. I didn't like it at all. So what I did was I pretty much started turning off the order book. I did not pay attention to the order book after around 11:15. I had it open still, but I just wasn't paying attention to it because I knew that it would inflict a response from me to close out a position too early or feel uncomfortable in a position. Even though I should be trading the charts, I know if I look at the book and I see in this situation here buying at 13 and then seeing 12.5 get stacked on the ask, it's going to cause me, you know, to feel a bit of pressure to sell into 12, right? So not watching the book was really helpful on this one, especially around this 11 o'clock mark. Scaled out, look for the retest, and that's pretty much it. Went for my pork rolls today for lunch, and that was it. Ended up buying some for overnight, 12.5, 12. I saw 11.5 as well, and I was umming and ahhing about taking it, and I was like, no, Demo, don't do it. Don't give back profits. If this thing tanks in the final minute, that'd be tragic. And I would just be giving back for nothing. So I sort of resisted buying at 11.5 as well. Really happy with the close. Buying strength came in, lack of interest in selling, some volumes came in as well. So it was really healthy to see this stock buying up into the close. It wasn't massive volumes or anything, but it did hold up. So a lot of speckies ran today. I think we had 4 or 5. I think PVW ran as well, but I was sort of out on lunch, so I didn't catch that one. And we're going to have a quick look at PVW as well, what that looked like for today. So a lot of runners today. Nice little chart as well. And there was another chart as well, DSE I think it was. So this was a beautiful little pump and recovery. Terrible looking volumes. And then DSE as well in the middle of the day and just stonked to the upside. So I didn't catch this one either, but I was really happy with the stock selection that I had. We're no longer doing pillow fights anymore in the morning. Today felt like a really comfortable day to just smash the chart, and it felt really comfortable on CXM for most of the day. And everything just worked out, right? We went long on everything, and everything just happened to work out. Obviously, there was a couple of opportunities on things like CIM to watch the chart a little bit more, but it's hard for me to really focus on something like CIM, which is a sort of a mid cap. I think it's like 5 to 10 bill market cap or something like that. It's hard for me to focus on that when I've got a stock going from 7 cents to 10 cents as a percentage. It's just so large. And the profitability there is so much higher that I lose interest in literally everything else. I'm done. I'm done with everything else. If a stock's gone from 7 cents to 10 cents, I'm going to put all my attention on that. And it causes me missed opportunities on something like CIM, which obviously stonked to the upside. But I prefer targeting one stock, and if it's a micro cap that's rallying, I'm going to take that every day of the week because that's my bread and butter. So I hope you guys found this content helpful. I hope you found it beneficial to your trading to see what to do in the future, what to avoid. And guys, I'll catch you next time.